Hi, and welcome to the Stock Scores Market Minutes for December 19th, 2016. This week we're going to talk about this idea of overcoming yourself, do my regular weekly market analysis, and then look at the trade of the week. All right, so overcoming yourself. As a human trader, you really cannot be trusted. No matter how hard you try, you will introduce your bias into your decision making. We as humans see what we want to see, and we're heavily influenced by our emotions. The only way to overcome that is to develop an approach to the market that is rule-based and uses analytical methods that leave little room for judgment. So it's one thing to say, I want to buy stocks that are breaking out. It's another thing to say, I want to buy a stock that's breaking out to a 5-day high. That's very specific. It leaves little room for judgment. Algorithms beat the market because they remove human nature. Some of the best investors these past few years are those using algorithms to make their decisions. Now, I'm not saying you have to be a computer, but to take out your human judgment as much as possible by using very specific, well-tested rules will help you do better. All right, let's get into this week's analysis. Here's the chart of the S&P 500 for the last 30 days, and you can see that we've had some weakness over here, not really out of the ordinary given the rally that we've had. There's the upward trend line, and essentially we were at the top of the channel and we pulled back and we're now at the bottom of the channel. The question is, will we hold the channel or will we instead break down through it? And that's the thing to watch as we go into year end. We've had a terrific run over the past, over a month, 5 or 6 weeks. And at a certain point, there's going to be profit taking. The people that bought back here, well, they're going to want to take profits up in here. It's just human nature. On the longer term chart, you can see the issue. We closed below our open this week after hitting a new high. That's what happened right there. We were basically at the top of the channel. We could still see a little more upside, but my sense is we're due for a little bit of a pullback coming back into here. Wouldn't be a bad thing. It's just normal course of action in a market. You go up, you pull back. You go up, you pull back. We've gone up. We now probably expect to see a little bit of a pullback in the near term. On the Russell 2000, we have an inside bearish candle. That means it's inside the range of the previous week, not particularly bad. Sort of means like a little pause before it continues higher. I don't see as much reason to think that the market here is going to pull back, except for the fact that it's way above the upward trend line. We've really kind of gone parabolic here, and that means it's due for some profit taking. On the TSX, here's the 30-day 60-minute chart. And you can see that our upward trend is something like this, and we're basically seeing the momentum slow. See how that line that I've drawn across the tops is not moving up as quickly as the line that I drew across the bottoms. What that means is that the buyers are losing their strength. Here they were strong, they push it up steep. The next time they push it up, they weren't quite as strong as this time. The gain wasn't as substantial, and that shows that the buyers are losing their motivation. It doesn't mean that the market is bad. It just means that the buyers are getting tired, and eventually they're going to be beat by the sellers who inevitably take some money on profits. Now, it makes sense that that would happen because we are at those all-time highs for the TSX. Basically, we've hit that mark. We're away from the trend line up here. So it's very likely that we will get a pullback in the short term. Doesn't mean that the market won't be higher in 2 months. It just means in the short term, the market needs to take a little bit of a breather. On the venture side, of course, fighting with that weak gold market, because many of the stocks listed on this market are in the gold sector. Of course, you've also got the marijuana stocks, which are doing well, but the index itself is heavily weighted towards mining, which is why you see this weakness. However, there are pockets of strength within the market in certain sectors that are doing well. You just have to avoid the weak ones and focus in on some of those strong ones. On the Treasury bond side, we've had a dramatic move to the downside in the bond market. You can see we're way below the downward trend line. We've sort of broken through this support. Next stop is this support. And so we are probably nearing a point where the bond market bounces. I think that could happen in the next week or two. However, I do not yet see a sign of a bounce, and therefore I want to be negative. Look at the stock scores, how they've been low since October when the market first broke the upward trend line right there. That was our sign that this was a market moving lower. Of course, we went parabolic to the upside here, and then that breakdown was, I guess, the aggressive sell signal. when you had a breakdown from a parabolic upward trend. US dollar got some benefit from a rise in US interest rates today. Not really a surprise, I would say, but that perhaps is the culmination of why the market has rallied up to its highs. I think it'll probably get stuck here short term, but wouldn't surprise me if longer term we see that US dollar go higher. It has gone a little bit parabolic here, so we're probably due for maybe a little bit of short-term profit taking in the US dollar, but it does look like it wants to go higher in the months ahead. On the gold market, well, that raise in interest rates has really hurt gold. Even the speculation that it was going to happen when we broke the upward trend line there, and we've just been diving lower ever since. We still have a long way to go until we hit support way down at 100 on the GLD ETF. And I don't think there's anything that's going to stop gold from going there. I've said it for a few weeks. It is oversold, which means don't be surprised if it does this before it goes down. But inevitably, I think that this market is having a tough time. And until it can break the downward trend line, I don't want you to be too optimistic about it. On the oil side, we've had a good little rally the last few weeks as the market priced in a reduction in production from OPEC and then non-OPEC countries. And that's basically taken us up to resistance right there. But this is the trading range we've been in for the last couple of years, and really a narrower range for the last half of this year. And we're at the top of the range, which means we probably pull back in the short term. Until we can make a sustained breakout through that price level, I don't want you to get too optimistic about oil. That could happen. Could happen in this week. It could happen 3 weeks from now, whatever. But until we get a good break through the $12 mark on the USO ETF, I want you to remain pretty cautious with oil and just trade the range. Sell it at the top of the range, buy it at the bottom of the range. Fear at a low, I would say complacency. That's always a sign perhaps that the market is too unconcerned about the future. And if we do see some profit taking coming into the market, we could see the VIX spike higher like we had here and here and here. But those are very short-term spikes. So treat this as a very short-term trading vehicle. So US stocks, I've got bullish long-term. It is still in that upward trend, but neutral because it's testing the bottom of that channel, and it did close below its open this week. On the Canadian market, I put a neutral rating long-term because that market has rallied back up to those long-term highs where it is very likely it will get stuck. So I don't think it's a bad market. I just think it's a one that's likely to take a breather. Now on the short-term side, I have left it at bullish because there's no sign of weakness. I think that could happen next week, but for now, it's still in a bullish trend. Gold bearish in both time frames. Again, I've said it, very oversold, but there's no sign of a bounce there. Oil neutral in both time frames. We're at the top of the range. It does look like oil's sort of losing its momentum from the last few weeks. Stocks appear to be starting a period of profit taking as the buyers lose their motivation. Longer term trends remain up, but overextended, as I've said. Gold is oversold and due for a bounce, but I've said it's due for a bounce for a number of weeks. There's still no sign of one happening yet. Oil has rallied into resistance where it will likely stall. Fear is at the point of complacency, and sometimes that's a little hint that we're on the verge of some profit taking in the market. All right, this week's trade of the week, AKAO. I had this one on my list on Monday because of the real abnormal volume that we saw right from the get-go in the morning. Entry point for me was right there on the message candle, breaking that pullback. It was abnormal, and then it gave me my signal using my message candle indicator, which is a little white dot there, breaking that pullback, and it went for a big run, more than 10-to-1 risk reward into the close. A nice, very nice day trade. All right, well, that has been the Stock Scores Market Minutes. Like the video, subscribe to the channel, and most importantly, have a great holiday season. I'll be back probably not until the new year, actually. So a little holiday for me from the videos, but I will be seeing you in 2017. Have a great holiday season and trade well.